As a leader, you face challenging decisions every day, navigating evolving customer needs, new technologies, and dynamic competitive forces. You must think differently. Find new ways to engage customers and grow your business. Drive positive change. Move the industry forward. Because a strong financial services industry helps consumers, businesses, and communities thrive. At BAI, we're committed to doing just that by providing trusted information, powerful tools, actionable insights that provide leaders like you with the clarity and confidence needed to prepare for tomorrow while performing better today. Be inspired. Be empowered. Explore new possibilities. It's time to move forward with smart business decisions. Move forward with BAI.
Ladies and gentlemen, please welcome Debbie Bianucci, President and CEO of BAI.
San Diego, and to BAI Payments Connect. On behalf of everyone on the BAI team, I want to tell you how much we appreciate you being here with us this week, rain and all. It's so funny to hear the San Diego weather forecasters talk about what we in the Midwest deal with practically every day of the year. We're here this week to help empower payments leaders to make smart business decisions in your organizations. And what's unique about BAI is that in the industry, we can provide you with a safe environment, a trusted environment, to be able to get a 360, unbiased, objective view of the issues in payments, and there are many. What do we mean by 360? Well, what we want to try and do for you this week is to bring not only the strategic perspectives that we think are very important as you navigate what you're trying to do in your organizations, but as you've told us for many years, the importance of being able then to connect the strategic perspectives with the execution associated with operations and risk and fraud. And so we'll be doing that this week by giving you insights and information and making it possible for you to have connections with people and technologies and other organizations that will challenge your thinking. And so we have a great week planned for you, and we know you're going to find it to be very interesting. We're going to start this morning by talking about disruption and innovation. And I don't have to tell you that disruption is a big deal in payments. We just completed a BAI study where we learned that of the executives that we surveyed, 73% thought that disruption in payments was going to have a negative impact or a huge threat on our business. So nearly 3/4 of the people who are dealing with this disruption factor are really concerned about it. The challenge, though, is that disruption is not a one-time event, it's continuous. And for those of us who've been around the industry for a long time, we know that in payments, disruption has happened all along the way, and it's going to continue to happen. So that means we have to embrace it, we have to deal with it, we have to understand it. And that's what we're going to try and do as we're tackling the issues that we face in the conference this week. So this morning, I'm so pleased that we have an innovator and a disruptor right here with us. Many of you may remember Arkadi Kuhlmann from his role as CEO of ING Direct. And if you think back to what ING Direct did, they had innovation and technology and a unique culture that came together to change the way that they were able to interact with their customers. And Arkadi is committed. In fact, he's made it his life's mission to find ways to connect people differently with their money. And after founding 6 banks, he's done that quite successfully. He's now the CEO of Zenbanx, which is a very interesting model. that has focus on segments that might be different than yours, and has been quite successful in being able to achieve success in the mobile banking model. I know you're going to like Arkadi. He's smart, he's experienced, he's very open and will share his views, he's funny, and I think it's going to be a great start to the conference. So please join me in welcoming Arkadi Kuhlmann.
Thank you, Debbie. Well, good morning, everyone. I'm delighted to be here with you. Of course, Debbie's comments about myself I could actually use with my board to see if I could get a raise. That would be very helpful. Let me start by, there we go. The future is born from where we are today. It is amazing in the journey that we're all on in the payments world, trying to sort of see where the journey's going. And if you look at these simple sort of statistics, there's a couple of things that you already know that we're sort of confronted with. First of all, it's just the sheer prevailing, overriding smartphones that everybody's using on the mobile devices. We also know that everybody continues to go up the adoption curve a lot quicker than they used to. And so every time we look at the charts that predicted the move towards debit cards or towards basically online, and now we see what's happening with mobile, it's an awful lot quicker. Some of you might want to know that there's 2,900 banks that offer mobile banking. I really want to know if there's anybody here from the other 4,000 that are not using it. And of course, the last point is probably the most interesting one this morning, and that is that the millennials, which everybody talks about as the new sort of demographic segment, they don't think they need a bank at all. They need banking. And the importance of that concept for us, I think, is that the gap that's getting wider and wider is between what consumers or small businesses think is really the standard of what they really want to do from a delivery and from a customer point of view versus what we're able to deliver from the supply side is actually getting wider because of a whole number of reasons: friction, regulation, and of course, just the speed of adoption. If you look at the trends on this slide, it is amazing to me that 2 years ago, half of these points were really not there. If you look at the famous brands, I think you can probably think of a couple right now. You're not going to find on the front of any phone a bank app that's actually famous. And I'm really not sure why that's the case. And the same thing with the payment side. Money and the social trump of issues, we still tend to segregate things between this is what we have to do from the money part, and then over here we have all this rich personal interaction that consumers have at the point of sale, at the point of interaction on making a payment with money. And they have different views. They look at pictures, they look at messaging, they look at tracking, they look at confirmations. And we're having real problems trying to figure out how those things should be tied together. I think that's really an important point. If you talk to a consumer and you see how they interact with payments, you know exactly all the things they're looking for. But the other thing that's probably most critical for them is that they want it to be easy, they want it to be real time, they want it to actually work, and they like to feel good about it. And the only way you can feel good about it is if you actually have an opportunity to basically make that transaction seamless. So we in the payment industry are having real problems trying to tie the money together with the social interaction. And that is one of the great challenges that's happening right now. When it comes to a digital strategy, it reminds me of about 15 years ago when people sort of thought that the internet was a business, and it's not. It's not a business model. It's just another method. And I think that as everybody's moving towards a digital world, we're trying to leave behind the legacy systems. The ability to move to real time is really a huge, huge requirement. and we're way behind other countries. It is amazing to me and somewhat disappointing that we in the US, cannot actually get into the same real-time systems that are basically being used in this digital world in other countries. And I think it's something we have to come to grips with. And the same goes for the complexity that we have inherent in the infrastructure of how we basically do payments and clearing. One of the biggest problems we have on if you're talking about POS devices or even mobile devices is the ability that we debit and credit both sort of items in the process. If you look at some of the other sort of payment systems around the world, and you look at something like the gyro system where you can only push, you can't pull, all of a sudden digitally the world becomes a lot easier. And that is a fundamental issue in terms of underlying the kind of business models that we have to encourage to basically adjust the basic system to allow us to change the way payments are being made. And one of the most fundamental things is to get to a push system, to get to basically a credit system, and stop allowing basically the system to be able to pull things out of an account and force it into a push system. We'll talk about that maybe a little bit later. I think the issue about just-in-time information, everything gets to be very fragmented these days. I get some things that are very easy, it gives me an alert or it gives me a confirmation. Very hard for me to basically tie all that information together real time. So search ends up being a big thing in payments. Where is the payment? Who sees it? What does a confirmation mean? So there's a lot of sort of things that go around the outside skirts, but doesn't really go to the heart of the matter. And I think that really basically speaks to how complicated we want to make a relatively commoditized product. I think many of you know these two lists. If you are from one of these companies, I'd like you to give me a cup of coffee afterwards. But everybody's doing a lot of things. What's really important about this sort of slide, and it really speaks to the challenges in payments, is that we have this whole debate going on between inside the tent and outside the tent, or you're regulated versus unregulated. And the question is, do you form partnerships, or who carries the burden of the economics? Who carries the political issues when it comes to regulation? Who are the champions? How do we change basically everything moving forward in a positive way? And should that be done from the established, licensed, regulated entities, or how do we do this from basically people that are trying to do fintech startups and trying to come up with new applications? It is generally true, and I think you would agree in the conversation for today and tomorrow, is that the technology itself is really not that complicated. The application of the technology is extremely complicated, especially in terms of matching regulation and basically doing data analytics and data warehousing and being able to access that data in real time. Those are really the challenges. So the integration between the regulation and the application of it on a day-to-day basis is really where the rubber meets the road, so to speak. And if we can coordinate some of those activities, and we might be able to actually put our shoulders to the same wheel and make some real changes. This, of course, leads to the huge disintermediation. I think many of you have seen this slide. It's become a very famous one. If your name isn't on this chart, please put it on there. Zenbanx isn't quite there yet, and it's my slide. Oh my God. All right, we'll have to work on this slide a little bit more. But here's what the challenge is for those of us that are financial institutions, regulated, small banks. Once you start taking away most of the assets and you unbundle them, and then you unbundle all the input factors in terms of execution, you really become a distribution point. And the margin is only so big to basically carve up and divide up. And so really it's a question about where to find value. It is interesting that the biggest danger for us on the payment side is that if there's more and more ways of unbundling, it's probably the payment function, it's the transaction account, that's the last holy grail. And if that goes, then basically there's really no way to make money except through some kind of an arbitrage. And so depending where you are on this slide, I would certainly recommend that there's two ways to deal with this. One, of course, is to find your area of expertise and specialize. Or the other one, basically find a way to come together and build a cooperative kind of activity, get up in scale and size. It would not be great for the industry if at the end of the day everything ends up becoming sort of one ubiquitous kind of a utility. And I think the reason for that is not that that you couldn't consider payments the way you'd consider electricity and water. But that really doesn't actually, create the rest of the value and the rest of the proposition for consumers to basically feel engaged with their institutions when they need all the other kinds of services that are financially related that they need to solve. So it's really a battle for, improving the oil and the economic machine for society. It is amazing to me, having been in this journey for quite a while, that we've seen all these transitions in front of us, and for some reason, we've had real problems thinking about this on the payment side. I mean, there's no question that when you see what happened in the music industry and where that is today, and that's all driven by basically consumer demand, and it's a push kind of pull kind of activity. We've certainly seen it with technology and computers themselves. And when it comes to banking and payments, we keep wanting to layer things on. I'm always sort of surprised. Every time I talk with my fellow bankers, it's always about channels. The latest catchword is omni-channel. I don't know. It seems like something like a Latin American TV show. I thought channels are for water. You irrigate the fields with the water, right? So I'm not sure. Well, we have channels. And we never actually kill anything. We just keep layering it on like another piece of application. We add it on like another thing. And then we decide that we basically want to do everything for everybody. And I can tell you from experience, probably one of the biggest lessons that I've learned is that consumers are quite happy to drop something if you tell them. So this whole thing about have it any way you want, anytime you want, any way, and you don't want to pay for it, right? It's not a good business strategy. It's actually very effective. They actually say something is only one way. This is the way. There's no options. There's no choice. And consumers get it if you explain it to them. Why is that so important in this conference today? Because it gives us an ability to basically kill some of the legacy applications and customer service friction points and move them to a new platform. And that's really critical. And people are generally afraid to do that because they think they'll basically get customers to be unhappy. And my experience is that customers will basically understand it if you speak to them directly and clearly and you explain what's going on. I know it's early in the morning, but I need you to understand that the mobile and the device is totally, totally different than what we thought it was. And I didn't know that 90% of people sleep with their phones. I didn't know that 74% of people panic when they misplace a phone. And 33% would rather give up sex than their phones. And I know that doesn't apply to anybody in this room because obviously this must be some kind of a statistic driven from millennials, and I assume there's no millennials in the room. But what fascinates me about this slide is that do you and I think that payments are banking, or do you and I think that payments are basically a retail function? And if payments are a retail function, then we have to think about payments differently than the supply-side traditional way of looking at it. So this is the problem. If the expectations are so high from consumers that they want the payment activity to be the same way as booking a restaurant on OpenTable, ordering a car with Uber, or basically doing an airline ticket, the post office has better customer service than a lot of banks. You got to stop and think about this. The post office in the United States is hip. Okay? An airline, I get onto an airline with my mobile phone, as I'm sure many of you did, right? We're in banking. Can you do that? If you go outside the United States, you can go to a lot of ATMs with a QR code. What is wrong with us? So if a consumer basically says, wait a minute, I get onto an airline, which is also regulated by the FAA, where are we? I think you should really remember this slide because I'm not sure I want to give up sex yet. We are making progress. There is a positive side to all this. Those of us that are continually trying to find more ways to engage customers are certainly basically trying to find those activities and those needs that basically customers have an immediate need for, if they can get at it easily. And there's an interesting thing about this. There's a lot of information that can be put in front of the door that does not really need to be behind the door. I mean, if I allow you very easily just to look up and basically just see what your balance is, does that really constitute a huge problem of privacy? In my US bank account right now, I actually have $2,382. I would like all of you to know that. It's there. If you find that interesting, by all means, write it down. Tell your friends Arkadi has $2,000 in his bank account. If you'd like to contribute some of it and push it to me, I think that's good too. But there's no way I'm going to let you debit it, okay? So can't do that. But a lot of this is driven on supply side kind of approaches, which is trying to get rid of the cost in branches, get rid of the cost on the 800 numbers, and basically allow people to do self-serve. And so we're kind of following it that way. But if you talk to consumers and they looked at this chart, they say, yes, I want that, but I want all the other stuff too, and make it easier for me. And so our challenge really is to find a way to look at the rest of the activities that can be done with payments and basically make it on search. I always find it amazing for you and I that when it comes to trying to find out what to do with payments, somebody always gets you to a Q&A page. Why is that? I don't want an education. I don't want to basically study this. I have a question. Give me the answer. We do this with everything on search, right? It's kind of funny. If I want to know something about my bank, I actually don't go to the bank site and I don't follow the Q&A. I actually go to Google and ask a question. That should be a big eye-opener on payments. So, anybody that would like to talk a little bit more about that? I've got a whole sort of 2-hour kind of box of thoughts around that problem, okay? The other world that's really different on the payment side is the ones that you see on this slide on the left. What I find fascinating about that is the battle between the wallets, sticking something on the end of a e-commerce transaction or on the end of another transaction, and those that basically want to look at the purity of a payment. And there are a lot of people that have specific customer bases and approaches where they're basically digitalizing their business. It's becoming all sort of in a digital, mobile, or an online world, and it's being tracked that way, and so the paper is disappearing bits and pieces. But it's a totally different kind of consumer set. So the ability to control your applications and who you want to align yourself with maybe says a lot about the kind of brand that you want to build and the kind of culture you want to basically instill. If all what you and I are going to do is talk to fellow bankers in the payment industry, we're not going to get much of a new way of thinking about some of the ways that consumers interact. But if you talk to people that are in the non-traditional, kind of disciplines, right, you'll see some new insights and some new ideas that could be exceedingly helpful. The brick wall, I don't really mean that to be a brick wall in terms of that regulation stops things, but it's a pretty big wall to get over. And I think there's two thoughts on the regulation that I think you and I, maybe can put some help to, which is number one is we have this major problem from all the regulatory issues and the regulatory agencies that sort of one shoe fits all. And I think that's a real problem because I don't think it makes a lot of sense, common sense, that basically you deal with everything, whether it's small or big institutions, small system, big systems, that basically you have one set of rules that doesn't seem to make a lot of sense. Other countries are clearly basically coming up with different types of regulations that sort of suit the vendors and the suppliers. And I think that basically creates the security and safety that's needed, but at the same time provides the efficiency and the productivity that is being demanded in the marketplace by consumers. And my measurement about whether or not consumers are happy with us or not is basically whether or not they talk about us behind our backs and they say glowing things about us. When's the last time you heard somebody unprompted basically say, "I just love that bank. They are really terrific"? If that does happen once in a while, I guarantee you it's because of one wonderful customer interaction with a great staff member. But you're not going to find it around the technology. The other problem with the regulation is that there is no real appeal. Regulation is totally independent in this country. It's beholden to no one. There's no accountability. There's no influence that can be weighed. So basically you have a situation where the rules of the road are, there's one set of rules and they won't be changed. Same thing goes with the tax code, but it basically actually aggravates the issue of who wants to be inside the regulated world and who wants to be outside the regulated world. And you and I know intuitively that if you bring some of those thoughts and disciplines together in a creative, positive manner, right, then you'll basically be able to move forward in a very disciplined and orderly way. And we would not be falling behind anymore. So the exciting thing about payments is act like retailers. I wish I could wave a swan and basically have us all basically tomorrow think of us as retailers. Not that we are. Most of us here in this room are bankers. And I think retail is all about detail, as you know. And what's really exciting about that is that while there's some big block and tackle things that need to go on, the real difference on the customer interaction edge is the small things. I can't tell you how many times I've had consumers say to me, "Geez, I really like the way you phrased that. I really like the color. I really like that design. Isn't it cool?" And when you look at all of the websites out there and all the online screens, you can almost tell. If you mask over the names, I can almost tell you everyone that's a financial institution. They go through the same suppliers, doing the same web design, the same layout, and they're always saying to you, that's the standard. You have to have this over here, this over there, have to do this, and then everybody does the same thing, and then all customers in the United States all go to sleep. So name me a sort of total kick-ass website or screen that people will say, "My God, I don't even have anything to do today. I just want to go back to their website. I love it so much. It's just so cool." My son does that, but it's usually with music. This is really fascinating for me. Not that we're really talking here about sending money overseas, but I try to keep digging in where these consumers are going that are interested in banking, but they don't really like banks, and they don't really want to think about the utility aspect. They just want to be able to do something. Look at this, 28.6%. Not sure who they would trust or who they would go to. The white space, I think, is there. You know, people generally say to me, "Well, it's all being done now. We're all in good shape. Don't worry about it. We're just doing little improvements here and there." That's not what this slide says. This slide says, I'm open to change. It says, I'm open to a new idea. The field's going to get more crowded. I couldn't talk to you this morning or set the stage without this slide. This slide is actually burned into everybody's memory. I'm sure you see this at every presentation from every consultant. But it creates really an interesting question for me. While all those things on this pyramid are really important, and I don't think anybody would argue with it, matter of fact, you can't argue with it, the real issue is it should all be under the hood. You know, when you and I buy a car, right, we don't actually go through and look at the engineering for the motor. We don't actually talk about the kind of materials that are used inside the car. We're really talking about the functional use of the car. So this is something that's really important, but it's basically become so pervasive that it's in the front office as well as the back office. It's everywhere throughout the organization in the interest of creating a culture of risk and compliance. And I think here what we're missing is the point about smart analytics and smart database and warehousing, because the question really is real-time management of the transactions and payments that basically eliminates most of the problems and risk. Until we get to real time, and there's too many people resisting real-time activities and monitoring, right? It makes it really difficult for us to basically deal with the risks associated with the transactions. Well, digital security. Two big issues are going on that we've been talking about for at least 10 years now. And it really has been about identity. The United States is one of the few countries where we have no way of actually finding out who we are, so we continually mix up identity with privacy. Most Americans think that somehow identity is privacy, and you know that's not true. By the way, everybody here should know my blood type is O positive. And I think that the larger issue with data security is that we haven't agreed on what basically the consequences are. We keep trying to find ways of identifying a problem, and then what do we do in the industry? We then create a business around it. So if there's identity theft, let's create identity theft insurance. Think how people in Russia would deal with that. Oh, identity theft? We'll send you somewhere to a nice prison, or why don't we just execute you? The overriding problem with data security, let me leave you a thought this morning, is culture. We Americans think it's quite appropriate to basically game the system, hack to the system. The worst will be a little slap on our hands. We socially accept it. And until we stop socially accepting that basically hacking in and dealing with security speaks to the integrity and the soundness of the system, and if we allow that, no matter how many applications you lay over, how complicated you make the encryption, and on, it's not going to make any difference. The only way to solve this problem is culturally, by basically saying it's not acceptable for us in our society when it comes to money and payments. That's the oil in the economic machine. It is not appropriate for you to lie, put in inappropriate information into an application. You do not lie about financial information. Unless you actually enforce that and actually get very aggressive, it's even a challenge for banks to even begin to share information about fraudulent activity. So I think this is something that I think needs to have more debate, and I think can work really well. You know this one. What I'm curious about is, what's the other half thinking about? I don't want to say much about these four categories, but what's most important is there's very little being said about regulation. There's a lot of good initiatives that people are beginning to put together, think tanks and task forces to look at stuff, but continually there's not enough new white papers that are actually out there that are actually being forced to basically put together an agenda that we can talk about. The political arena is quite alive. We need to find a way to get this moving, and I would encourage all of you to think about how some of the things that you think are appropriate, right, should be debated in a bigger context. This is probably the last little thing I want to talk about this morning. When you work as I do in sort of the payment mobile space, as we all do, one of the real limitations we have is language. And the trouble with the English languages or Western languages is they're words. And words are extremely complicated, and they're actually not friendly to digital. What really is Q on digital is pictures. Back to the Egyptians, the hieroglyphics. Back to basically kanjis. Back to the way the Asian languages work. Symbols and pictures work a lot better than words. And they're much better organized. So maybe a prediction here this morning would be that In the next 20 years, everybody in the United States will be speaking Mandarin. And we'll be doing our world in pictures. So the more you can turn everything into pictures, less words, more symbols, you're going to actually have much faster traction. We have been on the journey, I and some of my colleagues have been on the journey of biometric verification. We've been on this for 20 years, made some headway. It's amazing, we're still struggling with it, but I think there's the very, very big hope on being able to do a lot more on biometrics to get to where we need to be. And the last thing I want to basically talk to you about is the beginning of mobile love. I know you're talking about payments, and I know you probably have a nice card that you can swipe into a POS. You can have a mobile and you want to read it. But if we're going to make some real headway in payments, we really got to find a way to change the conversation. How many of you flew Southwest Airlines to get here? Okay, a couple of you. Great. Do you remember the days where, they kept talking about love, and it took me a while to figure out what are all these people with shorts doing, right? Being in an airplane, throwing peanuts at you, right? And basically saying to you, this is the love machine. And I thought to myself, wow, did I get on a trip to Vegas, or where'd I go, right? And it's kind of fun. It's fun. I mean, obviously, your lips probably aren't like mine that can't make that kind of a smooch on a cell phone, but still, why can't it be a bit fun? Why does it have to be so dreary or so hard? I mean, if you think about the concept of money, it's not money itself that's even interesting. It's really only what money does. So whatever the purpose of the money was is what we have to glue the money to. So if I'm sending you a picture and I'm sending you a wish that says happy birthday or have a great weekend and here's $50, right, to have lunch with someone, that's the activity, that's the value, that's the interest. So why don't we put the weight and the value on completing the purpose of the money as opposed to the money itself? And one way to start that kind of thinking, right, is basically to think about, mobile love. It would be great for us to have a famous financial institution brand that's beloved by consumers. We have it in other areas of retail. Wouldn't it be great if someone basically said, wow, that's a famous financial brand. We love that brand. We recommend it. It's viral, right? We can't wait to do more. We can only do that if we actually basically start changing and not thinking about the mobile or the next payment method as another channel. It's not about getting water around. It's about getting people socially interconnected. And in that social interconnection, we want to be there with the consumer. We want to be there in a cost-effective way to create value. And the way we can do that. So I want you to join me, right, and start promoting a bit of mobile love. And my colleagues and I at Zenbanx, we're on that journey. We're having fun doing it, and we love to be part of your journey to make payments great and get people to love what we're doing. Thank you very much.
Nice job. Okay. We have time for a few questions, and if you haven't already done so, get into the BAI Payments Connect mobile app. And I have a few to get us started here. This is a question from Steve. For you, Arkadi, many banks have built their success on physical distribution, and they're looking for ways to better serve customers using mobile and online channels. What's the most important advice you would give for them to be more effective, particularly with mobile?
Well, I think the mobile love thing was, one way of answering that. But the other thing I think is really important is please do not think of mobile as just an extension of the physical location. Don't think of the mobile as, the extension from a branch or the extension from a POS terminal, right? Think of digital as basically a whole new construct and work backwards. one of the most interesting things to think about mobile. And if you had a clean sheet of paper, how would you want a customer to interact with it, and how would you want that customer to basically follow through and complete that transaction? And so it's really helpful, I think, for you to think from the customer back with a mobile in their hand, which is the most intimate thing right now. And Debbie, I actually heard these days that women are now willing to actually give up their bracelets and their jewelry, and are now putting diamonds and emeralds on their cell phones as their most intimate object that they have with them all the time.
Sign me up. So that's an important point that you're making about treating it as something separate. But most of the people in this group have legacy systems
Yes.
that are complicated and cobbled together. So how do you address that?
I think it's probably the best methods that I've seen are the people that try to actually create a whole new approach, and you got to basically cut the umbilical cord to the legacy systems. You can't keep layering systems on top of systems. Then on top of that, you put acquisitions together, mergers. And before you know it, you've got 5 different operating systems, 6 different ledgers, right? And you're really stuck with that, right? I think you need to find a way to basically break out. And I think those that are willing to do it, I think, can start a new division. But when you start a new division, like the mobile division, so to speak, basically do it from A to Z. If you just do it as another, marketing front end, this marketing front end broker agent business, right, has some real limitations. And if it's not regulation, I tell you, it's going to be economics.
So this is a question from Linda. The financial services landscape is now very blended, with traditional banks and fintech companies competing to provide financial services and partnering all at the same time. How do you think this is going to play out over the next 3 to 5 years?
Wow, that's a great question. I think there's a real movement afoot now where banks are basically saying, hey, we got to do more, we got to catch up, and they are catching up. A lot of the fintech companies that are in my neck of the woods in Silicon Valley are basically all saying, well, we got it started, and now we're going to basically monetize and partner up. So I think there's some transference that's going on between the fintech players and the established players. And I think a few of them will work, although the partnerships are hard. And there's not been too many successful ones yet. And the reason for that is because it's very hard to quantify them. It's very hard to make the economics work. You know what the margins are. It's commoditized products. So who's going to pay for it? So I think that we're going to see a few winners. We'll see a few breakouts. But I think my bet is that there's going to be a couple of non-traditional bank players that will end up looking quite different, and they'll become best practices in the industry.
So I think we have time for one more. This is from Robert. Mm-hmm. We're all looking for ways to be more effective in innovating to serve our customers, particularly in payments. And financial services companies are approaching innovation in new and different ways. So in your experience, what have been the keys to success in innovation, both in products and in channels?
Differentiation. There's no question differentiation is number one. If you look at your whole conversation, excuse me, and you find out that almost most of it is trying to find a consensus view or find the optimized view, the two negative things you need to think about is never use the word optimization, never use the word consensus, be different. The whole industry is doing this, go do that. That's been my best experience because you need to get people to think differently and make choices. Consumers make choices in other areas of their retail life all the time. They know exactly what they want to do. But if you don't differentiate yourself enough, you're not going to make any progress. And that's what basically the fintech companies are basically suggesting to the industry in payments, that we can somehow get customers better and we can do it better than everybody else. And at the end of the day, you'll buy the customers from us. Why is that? Can't we get our own customers? It's an interesting thought we should debate. And I'm sure Debbie and the team will be delighted to debate that all day with you. But thank you very much, and good luck, everybody.
Thank you.
Thanks,
Great
Debbie.
job. We can finish off now.